Okay, there we go. Morning, everyone. Hope everyone's doing well today. And today is the day. It's finally here. We have the FOMC, the date that a lot of probably everyone that has anything to do with markets has been waiting for. Right? We're waiting for this historical event in the Federal Reserve's life, I guess, in this economy's life, in this world's life. A very very historical event here today, and it is the FOMC event, right? It's a 2-day meeting. It already started yesterday, but today they're going to be talking to us simpletons about their monetary policy, economic forecasts, all that good stuff. Right? They're going to be talking about it live. So the main topic of conversation, naturally, inflation and the rate hikes, right? There's actually a decent bit to talk about today, but the rate hikes on the table in today's FOMC session are expected to be the highest since 1994. Now, there was a period in 1980 where throughout the year, right, they did raise 500 basis points, but that was much further down the line before this current economic system right now. So right now there is a 99% chance, the last I checked, which was like maybe like 10, 15 minutes ago, 99% chance that we are going to be hiking 3 hikes, right? 75 basis points today, which puts the Fed's funds rate, I believe, I got to double check before I lie to you guys, but I think it's 125 to 150. Let me just make sure. I'm not like 100% sure off the top of my head. Go to my trusty Fed Watch futures here. So the current is 75 to 100. Sorry. So the expected move is 150 to 175, right? And that's going to be the target range. So for the first time since 94, we're expecting a 75 basis point hike, and the majority of big banks in America do expect the same, right? There are a few outliers, sorry, that expect to see just a 50 basis point hike, and then again a few outliers that expect a 100 basis point hike. So we're going to see how that shapes up, but it's going to be a huge event. Now in these markets right now, it's a lot more drastic than you would think. Like, a lot of people are thinking, okay, just like throw the whole boat at it, let's just like destroy this thing, let it regulate itself. Well, bond markets are starting to tumble around, and we've seen that through the ECB, which is something that we're going to be talking about. But this is all about fighting inflation in a sense, right? Like they're aggressively raising because of these inflation numbers that were extremely high. So one other thing to notice, right, the effect on the markets, right? The bond market has been tumbling really aggressively. The other effects on the markets, honestly, if we get a surprise 50 basis point after expecting 75, 100, this thing's probably going to rally to the upside. There are some sneaky bulls that are coming in low key on the order flow front, but what I wanted to say is that if you're trading today, right, I know a lot of people might want to just consider taking the day off trading, right? Just calling in sick from the markets and saying, you know what, like, it could get wonky. Because in the morning, first thing to remember is, do not chase the price. Do not chase anything, especially in the morning session. You're going to have chop. You don't want to overtrade that crap, because everyone's getting ready, right? Everyone in the freaking world that is trading these markets is going to be watching this event and getting ready for this historical movement, right? The last time we had something like this was before I was even born. So like, it's been a very long time. It's been what, 28 years since we've seen such a historical event. So it's going to be widely watched, and there's going to be a lot of market participants, and it can get really choppy. The seas are going to get really wobbly, and you can get hurt in this market if you're extremely active or you don't necessarily know what you should be doing in that sense. So again, a lot of warning signs there. To add to that, we are going to be trading this live with our community, right, in the futures front. So you can go check that out on the website. But again, it's going to be a very choppy event, I should say. So keep the powder dry until the afternoon, and trade way less size if you're going to trade this, right? Don't risk too much. Have a max amount risked for the day. To add to that, right, I was talking about bonds and bond yields, right? Bond markets are getting crushed. If you take a look at high yield bonds, right, you have ETFs like J and K, which again, junk bonds are going to be high yield. HYG, I believe that's, I don't know who it's from, but I can easily take a look. HYG, what is HYG? It's a high yield, but it is from iShares, right? High yield corporates, and they're getting destroyed, right? Which is not a bullish sign for this market. We also saw in the ECB, right, Italian bond yields get absolutely destroyed, right? The Italian 10-year was down, I think, like 33%, which is super worrisome because there's an increase in reinvestment risk in the ECB, meaning that they're calling for this emergency meeting, right? Right on the Fed day, an emergency meeting from the ECB. So even though they have to, they're looking to aggressively hike rates, the reality, or sorry, what was it? 33 bips on the day, the 10-year, right? Since that's the biggest fall since March 2020. Even though they're still looking to hike rates, right? These are the bond market kind of collapsing or starting to really collapse in the ECB is extremely worrisome because it increases that reinvestment risk, right, which is terrible. So the ECB says that they're going to apply the flexibility in reinvestment redemptions coming due in the PEPP portfolio, right? And they say that they want to reveal a new anti-fragmentation instrument as well. So they're looking to combat and really take away from the potential extreme downside in their markets, right? Which obviously will trickle over into other markets, and who knows, right? The states could be the same, right? The Federal Reserve could have something of similar caliber shaping up as well, with these bond prices extremely negative, especially on the high yields. So there's a lot to worry about there as well. The ECB calling this emergency meeting, right? Whatever the new anti-fragmentation tool might be, right? Whether they're going to start aggressively hiking as well. It's shaping up for a larger downturn in these markets than originally had thought. And then again, like the Federal Reserve, a lot of people are out there thinking, oh, just do it, just rip the band-aid off 100 basis points. But the effects on this, right? 30-year mortgages are at their highs, right? They're at, I don't even know how long of highs they've been on, but it's like 6.3% or something. So they're on these massive highs. The effects based on these increased rates drastically, right? We don't even know the period at which they'll actually taper off inflation. Mixed with quantitative tightening is spelling for a disastrous downturn in the following months, right? And again, a lot of people are saying, let it just regulate itself, let them just dump it, and then we'll figure it out after. Well, there's more consequences than just that, right? Borrowing cost, reinvestment risk, right? Tail risk is extremely high. People are hedging aggressively, right? There's no real value in the market right now. So a lot of these risks and all these market internals are shaping in for a deeper dive before we do find this quote unquote bottom where things can rally back up, right? Because the Federal Reserve doesn't have the ammo to cut rates when we're 40% off highs, right? They're not going to start quantitative easing after they just start quantitative tightening and increase the balance sheet to 12 trillion, 15 trillion, right? Because that ends up in the same exact situation as we are right now. So with that being said, right, talking a little bit about the macros and internals, we have the Fed today, right? 2 p.m. We're going to be in our live rooms at 1:45, starting this off, kicking it off. We're going to be looking at options and futures, and we would like you to join us there. So check out our website for more info. You can find a lot of stuff there to join us throughout that afternoon session to see what we get. But I would want to warn everyone, it wouldn't be the worst of ideas to potentially take this off. Limit yourself to X amount of dollars for the morning session and the afternoon session. Maybe even take the morning off. It's going to be choppy waters. I'm not necessarily going to get aggressive in the morning session. And watch this. And if you're new, really watch this and look how the markets move based on the reaction and the news. And in the following days, we're going to get better opportunity, better moves with Jerome Powell coming in on Friday as well. So I hope everyone enjoyed this stream. I hope everyone is ready for the day and took into consideration my warning signs, if you will. And we'll see you all in our trading room. We're going to open that guy up. And then we'll see you guys tomorrow. So thank you, everyone, and we'll chat soon.